And I mean, the headlines tell you that the labor market continues to improve, but at a frustratingly modest pace. The internals, the earnings, long-term unemployment, participation rate, youth unemployment, tells you the situation is very fragile. So I think the signal that's going to go out to the public is different from the signal that's going to go to our policymakers. And our signal to our policymakers is twofold. One, to Congress, please don't create extra headwinds because of the debt ceilings and the continuing resolution.
Right.
And to the FOMC and to the Fed, your job is much more complicated than you think it was, and it was already quite complicated.
Well, Mohamed, we'll get to the Fed in a moment, but on the debt ceiling, which I'm glad you raised, I mean, this issue is going to come up in the next 6 weeks, really. How damaging do you expect this could be if we see a prolonged debate over the debt ceiling, which we had experienced already before? How damaging could that be to the economy, or perhaps not?
So we, like everybody else, are worried about the polarization in Washington, because that creates headwinds to our economy and stops our economy from expanding at a rate that it could be expanding. We hope that Congress learned from the debacle in 2011 and that it will not put itself back in this minefield. There's no reason why it should get back into this minefield. If it ends up getting back into this minefield, we will have uncertainty in the U.S. at the same time as renewed uncertainty in Europe after the German elections. So the big hope is that this report sends a signal to Congress saying, please, no additional headwinds.
Well, Peter, do you expect that Congress is going to do anything with this report?
I think they're going to fight over how strong or weak the economy is, like they've been doing for the last couple of years. Betty, I've already been flooded with statements from both sides. Democrats highlighting the drop in the unemployment rate, Republicans highlighting the fact that this isn't the kind of job creation anybody wants to see in this country. And I think it highlights the gridlock that's likely to continue after this congressional recess. There is no clear end game in sight here, both for the debt ceiling and, as Mohamed mentioned, also the larger fight over government spending, the budget battle, continuing resolution. I'd love to get Mohamed's take as to whether or not, how Ben Bernanke and his colleagues are going to factor that in. Are they going to have to bank on the likelihood that we will see a debt ceiling fight, that we will see a fight over the budget, and as a result, are they going to have to factor that into their decision on tapering?
So, Peter, I think that they have to factor in the fact that the downside risks exist, both internal and external. And if they're going to taper, they have to taper not just because the economy is improving, but because they're worried about the collateral damage. I think net-net today makes it less likely that they taper in September.
Less likely. Okay, so what would push them over the edge to really delay this?
Weaker data between now and September, and then a reassessment of the cost and risks, as Mr. Bernanke puts it. Remember, the reason why they want to taper is both positive and less positive. Positive because the economy has gotten stronger, but less positive because they're worried about the collateral damage. And they're trying to strike that balance. And I can tell you, Betty, it's a very tricky balance. We have this notion of they're driving in a fog and they're trying to figure out the road. So it's quite a complicated issue.
It is very complicated. Complicated also by the fact that we saw the markets react so violently to even the thought of Fed tapering, which is something now that the Fed has to consider when it makes its next moves. And Peter, I'm curious whether or not, you know, in kind of a strange way, the Fed is fueling a stock market that's going to record highs, which means that Congress perhaps feels like they've got a little more room to then make, you know, to continue this gridlock because the markets aren't forcing them to do anything.
Well, Betty, I can tell you that's certainly a feeling you can get up here. There is a certain sense of complacency. You've seen the short-term deficit picture, for example, brighten somewhat. That also takes a little bit of the pressure off lawmakers to come up with a larger deal. But I think if we do see the makings of a real debt ceiling showdown again as we emerge from this congressional recess, you're going to see markets respond to that. And when markets respond, lawmakers respond. And I hate to say it, but it does take a crisis often to get members of Congress in gear and the administration in gear. And I think it may take that before they finally reach some sort of resolution.
Oh.